Good afternoon. This is Ken Long from Tortoise Capital Management with a review of some of the trades today from September 10th, 2012. Started off at 10:30 Eastern Time with a sideways quiet channel breakdown of IWM. We're going short at 84.05 with a 20-cent initial stop on this one. Basically, we had a sideways market from the open. It was choppy. The river held resistance here at 84.18, making a lower high than the previous high at 84.20. Looked at a higher high, a lower high, a lower high, and rejection of the river, which is the Bollinger Band 30 period plus or minus 1. These are on 3-minute charts, of course. At 84.05 price, and the 2-period Bollinger Band and the 10-period regression line failed, so we're short at 84.05, placing a 20-cent stop up here. That actually should be a little bit higher, just north of the river, so 20-cent initial stop. IWM found some support here. We ended up holding this one for about a half-hour loss at 84.15 when we stopped and reversed and went higher. That stop and reversal then got mucked for a scratch. So a couple times in the morning it looked like a really choppy day, but persistence is rewarded. You gotta stick around to play. Later in that morning, after a period of sideways quiet channel, we get a little traction with this sideways quiet channel breakout here. Initial entry at 34.60. Again with a 30-cent initial stop, which was never seriously threatened the rest of the day. Pulled back, found support at the Bollinger Band mean, stayed with it because the breakout had been to the north. The 30 period had crossed the Bollinger Band mean here, and didn't look like it was failing further. This volatility play, UVXY, for those of you who don't know, is that's the double leveraged VIX ETF. So we put the second position on at the next breakout from the river. So we get two positions on here. That second entry is also at 34.60, so essentially double up. Get a nice run right after that, and this is really the kind of move that we're looking to see or hoping to see on these breakouts from sideways quiet channel. That's the reason to be interested in it here. And so when it works, you get a nice fast move. Rolls over here, pulls back, end up exiting both of those at 35 even, getting bottom ticked once more. Finds support though, and then resumes. And when it takes out this higher swing high right here, we get a re-entry at 35.20. We get a nice run up, goes all the way up to about 35.70, pulls back. We exit in here at 35.50 for 1 hour on that trade. So the net of those little sequences is about 3.5 R. And now what we're interested in is this is what happens in here. How far back into the river will it go? This time it stopped right at the edge of the river. This time it seemed to be stopping at the edge of the river. Sets up our next series. What I liked about this one was we had a long spike down to 35.40, and I looked and said, well, higher on an absolute basis, so we have a lower high, and then a resumption of the Bollinger Band's move up and price moving up hard. What I liked about this as an entry at 35.60, as I note over here, was that we had this long spiky tail down, but it was not accompanied by volume. As you can see, the Bollinger Band barely budged, stayed sideways, so that looked like a quick shot to snatch up trailing stops, and then it bursts north, and we get this nice little move. Now we get a nice move up, and then some declining prices, but like this entry here at 35.60 with a 30-cent initial stop puts it at about 35.30, so just below this red line, not quite to the Bollinger Band mean. That's this trade, and we get the pullback, and because it's been kind of a choppy day and I'm hitting singles, I take this exit at 35.70. And I'm feeling pretty good that I at least rang the bell a little bit. It comes back to the Bollinger Band mean, holds support north of the river. Could have stayed in this one all along because the initial stop was down here about 35.30ish. But life goes on. So holds support at the Bollinger Band mean. And then breaks out again. And so in standard practice, what we have is what looked like a sideways quiet channel and a resumption of the trend. You've got price. You have the 2-period Bollinger Band leaving the river while the river is flowing upwards, and then joined shortly thereafter by the 30-period regression line, which you'll notice never ever even went back into the river, where if it did, it just touched at a tangent point right there. So we've got the beginning of trending behavior when all three, price, and both regression lines are out of the river moving the same direction. We get a nice spike up to 36.50. Again, I get the exit here back at let's see, at 36.30. It pulls back, finds support at the 30-period regression line, never enters the river. When it clears the highest high, I go ahead and re-enter at 36.60, again with the 30-cent initial stop, so that would put the stop down in here at where a previous exit was. It rewards us with an immediate rush up. I was too slow to add to it. It was moving faster than I could enter more bullets. Gets a nice run to 37.80. It pulls back. I take the exit at 38.50. That looks like the irrational exuberance, but it finds support immediately after I get bottom ticked again. It takes out the new high, and so by the time I get back in, it's at 38 or closing in on the end of the day. Get a quick hit up to 38.50 for an additional 1.5 hour on a single bullet. If I had been better, I have multiple entries in here and been able to ride it all the way out, but I'm never that good. And so we'll take 0.3R on the first one, 3.1 on the second move, 3R on the third move, and another 1.5R on the fourth move. So that comes in around 7 or 8R, I guess, along with the initial breakout. So the reason you're interested in sideways quiet channel is, again, you get these kinds of moves, and if you can stalk the exit, you can get out before you get the adverse move. And remember, as fast as this thing runs up, it can run down that fast too. So you get paid for quick decision making, and I'm willing to take pieces out of this, out of moves like this. Where does that leave us? In the market health check, all of that price action occurred inside this little daily chart, this little daily directional red candle between that swing high at about 144.5 and 143. So on a day like this, you can get some outsized moves in the volatility. Especially, this looks like guys are willing to hedge against this breakout. We're right back where at 143, which had been resistance during this entire daily sideways quiet channel. And we got this little breakout, and then a fail back to what was resistance. Now we're going to check to see if it was support. Wouldn't surprise me to see a sharp move down and then reverse to catch the weak hands. That's typical when you have the market in extreme condition. On a 10-day basis, it was oversold and has just come back into the high normal. So this is a natural place for speculators to get nervous, and that's, I think, what we're seeing with the volatility hedge, which makes the volatility ETF a really nice intraday trade if you don't have any beliefs about it one way or the other, but you can play the signals as we're looking at with the regression line crossover and sideways quiet channel. So there we are. Bull market, still bull quiet, tested a little high and an orderly pullback. And so this is still a bullish market. The daily river is up, the regression lines are up. The downside targets 140. If it fails at 143, then we're looking for 141 and then 140. A fail below 139 now starts getting like a serious run down to the 200-day moving average. I got no overnight risk on this one, and willing to trade it intraday in either direction using our key price levels. So have a good day. We'll see you in the chat room. Keep your risk measured and your powder dry.